Hi, what's up traders? Dale here of DK Capitals and welcome to another trading video. And this video I'm going to share to you once again my top picks for the month of July, most specifically for the second week of July. And by the way, before we proceed, if you're new in this channel and you haven't subscribed yet, please don't forget to subscribe and please click that notification bell for you to be notified whenever I upload a new video. And right now, traders, I'm going to share to you once again my top 3 picks. So these are the markets that are in my watch list that I have been currently monitoring because these markets qualifies initially to our criteria based on our trading system. Okay, so without further ado, I will show you my top 3 picks. So the first one in my pick would be the Dow Jones. Okay, so actually I have 2 here. I also consider Nasdaq, but as far as the structure is concerned, I prefer to trade the Dow Jones. Okay, so let me go ahead and share to you this chart. So, well, actually, I'm here now in the weekly chart or weekly time frame of Dow Jones, when I already labeled our key levels or our key supports and resistances. So as we all know that in our trading style or in our trading approach, we always do label the potential price bounce or the key levels where price will most likely turn or bounce or pivot, right? So as you can see here, let me show this to you. In the weekly chart, we can see that the market is now retracing or is pulling back to key support. Okay, so we have 2 key supports here. The first one is our static support level. So our static is the horizontal line or the horizontal bouncing levels of the price in the past several months. As you can see here, in 2019, this line here, this one, has been a resistance level. So price bounced heavily upon reaching this level around 29701, right? So this is the crash due to the COVID pandemic, right? And when the market managed to rally or bounce back, it broke above this level. And as you can see, we have sort of a retracement here, this candle, and price surged. And right now, as you can see, price is retracing back. And if you're going to relate it with the dynamic support level, which is our exponential moving average, I have here the EMA 200, this one. This is the 200 moving average, the exponential moving average. So this coincides, or this is a confluent level with our static level, which is at what? 29701. All right. So upon checking here, we have observed how the price reacts, and as you can see, price bounced significantly from this level. So it means that this is a strong level. There are buyers that are willing to defend this level, and this is most likely to be a turning point for another market surge, right? So as you can see here, this is now a solid support level or a confluent one. And if we're going to zoom it in, we can see that it formed a price action. Okay, so one of our favorite price action is the tweezer, so this one. And we can also see significant price actions, which are small pin bars. So this one, the short-tailed pin bars. So this is quite a sign or a signal that price may most likely move up. Okay, so this is our first signal, first sign, and let's go ahead and dive down to the daily chart. Okay, so as you can see here, we can still see a bearish pattern for the or in the daily time frame. So let's label here this one. This is our some sort of a wedge pattern. So if we can recall, there are several patterns of a bearish market. There is a bearish channel, and there's also a bearish or the descending wedge pattern. So as you can see, this is a wedge pattern. So the price is or it represents the weakness of the bears or the sellers. So as you can see here, there is a struggle of the bears to push the price lower, and it seems that price is showing some strength, and it's most likely that it will go up. However, let's not consider or let's not disregard the key resistance levels. So there are resistances here, like in this area. This is also resistance, and not to mention we have here the exponential moving average 200 in this level here. There's really a chance as well that price or the sellers may defend this area here, and it can bounce back down to this level. Okay, so our plan here is to wait for a significant a reversal pattern. So most likely if the price forms inverted head and shoulder, so as you can see, this is the left shoulder and this can be the head. So if we can see a price bounce here in this level, which can be the right shoulder, so it can be a good opportunity to ride this market up. Okay, so for the conservative traders, we can also wait for the price to break out above in this area. Okay, so if this one forms like this pattern, the head and shoulder, so it's really much conservative if we were going to wait for the price to break the neckline. So this is the neckline. This can act as a solid support level, because in this level we can observe that the moving averages will shift into a bullish one. So as you can see right now, the moving averages are still aligned in a bearish manner, in a bearish pattern, in which the short-term and the mid-term moving averages are below the long-term. So for the inverted head and shoulder, the potential pattern that we are waiting, if we will going to wait for the market to break the neckline, so these moving averages will now shift. So it means that the 50 moving average will now cross, or there's a possibility that it will cross the long-term moving average. So that will be a great confluence if you were going to trade based on the real context of a trending market. Okay, so right now we are still waiting. We don't want to buy in this one. We don't want to risk in this one. But if you're an aggressive trader, you may do so. You can also take advantage of the weekly time frame signal, which is this one. So I advise for the aggressive traders, you'll just have to lessen your trade or your risk. Okay, you'll just have to lessen your risk. So that you will be safe in case that the price will go down deeper. All right, so that's all for this one for the Dow Jones. So I will be parking this one right now to our watch list. Okay, so the next in my list is the XPTUSD. So this is platinum. Okay, spot platinum. So in this market, let me go ahead and check the weekly time frame. So as you can see here, I also labeled the significant key levels. So we have here a support level, which is a previous support level, and now the new resistance level. Right? So we also have here a turning point in this area. So there is no surprise that the price bounced here and it formed a pin bar. All right. And if this trend continues, so there's a chance that price may go down as deep as this one and as deep as in this area, 606. Okay, so guys, the most common characteristic of a market is that it always has a memory, or in most cases it has a memory. So it means that there's a big chance, or it has a tendency to retest previous pivot points, or previous swing points. So there's a really big chance that if this trend continues, there's a big chance that it will, or it may test this level once again, the 789.000 level, and if trends goes on, it may go down as deep as 606 or 610 support zone. Okay, so right now let me go ahead and go dive down to the daily time frame. Alright, so in this time frame we can clearly see a very good trending market context. This is a bearish trending market context, which is the moving averages 50 and 20 are below the long-term moving average, which is the 200. Alright, so, and also we can see a breakout below in this level. This is the support level, which you can see here. There's a pin bar. So let me just zoom it in for you to see it clearly. This one, guys. Alright, so this is the previous support level, this level here. Right, as you can see, there is a pin bar here, and price created a lower low. So this is the swing low, right? This is the previous high, or the lower high, the higher high, sorry, this is the higher high. And then there is a big chance that price will or may retrace here. So this is now our resistance level. Okay, so there is a big chance that there will be a rounded pullback here, and a price action may form here to continue the trend. So this is what we've been waiting. We'll wait on how price react here, and we will wait for our favorite price action to form here before we will enter. Okay, so this is a good risk-reward ratio trade. So if this trade materializes or forms, we can take a profit from this area, from this level up to here, okay, initially. So that could be a 3 or 1:3 or 1:4 risk-reward ratio, or even bigger. Okay, so right now, guys, this is still in our watch list, so we don't want to sell right now, because as you can see, this is a dead cat bounce. This is a rally, or a bearish rally, right, or a pullback. So we will, of course, we will wait for the price to hit in this level, and we will wait for our signal here to sell, to ride the trend down. Okay, so I'm excited for this. I really monitored this for quite a while now, though I wasn't able to share this setup before, but right now I'm going to update you regarding this one. Okay, so lastly we have the British pound, right? British pound yen. So I have traded this one. In fact, right now my trade is already running in a profit. I actually entered here in this region. As you can see, this is a very obvious support level. Okay, so let me see. Okay, so this one, this is obvious support level. So price broke above, and then it retraced back, and then as you can see, the moving averages are aligned healthily, which is bullish trend. Short-term moving averages are above the long term, and price made a significant pullback here and form our favorite price action, which is the inside bar reversal, as I call it. Okay, so I entered here, somewhere here, and then put my stop loss here, and right now the trade is running. Okay, so I am rooting for the price that it is most likely to hit the target, which is the 174 174, somewhere here in this level. Okay, so as you can see, this is a short-term or mid-term resistance. So price now is being held here, being suppressed, but we can see a good, ascending pattern or ascending triangle pattern. So this is a good bullish pattern. So it may break out here and target our hit our potential target. Okay, so this is also a 1:3, 1:4 risk-reward ratio trade. Okay, so right now we are really strict with our regime. We're really strict with our criteria of picking trades, which gives us a good risk-reward ratio. So in most cases, we do trade setups with 1:3 or 1:4 risk-reward ratio. That is a standard. Okay, so I'll be posting again this one. I hope you were able to ride this one. And in my community, I have exclusive community. I post updates or more detailed updates regarding my trades or regarding the setups that we are waiting. So right now, I'm going to park this as well. I'm going to hold this trade, and I will update you if our setup played out. Okay, so that's it, guys. Thank you so much. Again, my name is Dale, and have a nice day. See you.